Today, we'll understand what is there inside IFRS Starter Kit. IFRS Starter Kit delivered based on BPC standard product. It will have some models, the models for consolidation, legal consolidation, the models for budget consolidation also. We will concentrate on legal consolidation. It delivers one model for consolidation, one model for intercompany matching, one model to store rates, exchange rates, one model to store ownership. It also delivered some reports, P&L statement, balance sheet, cash flow, comprehensive income, and changes in equity. There are some other reports. We can check those all those reports. Also, there are some input template to adjust the data. All the business rules are configured. Group chart of accounts configured. You can adopt the group chart of accounts as per your requirement. You can adopt the input templates as per your requirement. You can adopt the business rules as per your requirement. Let's see what are the business rules available, what is the modeling part available in IFRS Starter Kit. You have to install IFRS Starter Kit, download from the environment, can be downloaded from the software corner. From there, you can install this particular IFRS Starter Kit using UJBR. There is a document which tells how to install IFRS Starter Kit. Now, let's see what are the models available in IFRS Starter Kit. Go to Administration, Dimensions, Models. There are 4 models: consolidation, intercompany booking, ownership, and exchange rates. These 4 models are designed for consolidation. Also, there are some dimensions designed for it: account, audit trail, currency, entity, flow, input currency, IC account and IC audit trail. It is designed for IC booking, which is intercompany transactions. Own account, ownership account, this scope, these dimensions are designed. Now, when you open this account dimension, there are some important properties in this account dimension. For when you want to understand IFRS Starter Kit, the most important thing, you have to understand the account dimension of IFRS Starter Kit. The important dimension here is account type. Account type is basically tells whether that is an asset account, liability account, income account, or expense account. Also, the other thing is this selection in input. So report, right? Input report means input template or report, whether this can be selected in the input template or not. There are some hierarchies, so there are some nodes. If you see in any dimension in BPC standard, you will have members. Also, you have hierarchy nodes as members. So in the input template, you might not need hierarchy nodes. You might need only base level accounts. So they have given some selection criteria. Selection in input report. So A110 they want in the report. There are some accounts. For example, A11B, it's a clearing account. A119B, this is offset account. This is basically whatever eliminations are stored in this particular A11B, A119B. So these accounts you don't want to select, right? In the reports, let's say A1140, this you don't want to show it in the report because it's a construction in progress. So here you can do these things, you selecting Y in the selection input report. Based on this property, you can generate the input templates. So A119B I don't want to show in the report. So what happens, whether they have selected this or not? Let's see, A119B. See, because I don't want in the report, they selected as N here. This was first property they have used. The next one is another important property. This is for reporting purpose only. I am not going to use this selection in input report in any of the business rules, in any of the script logic or whatever I am going to business rules or input templates or reports. So sorry, I used this selection input report only in the reports and input templates. I have not used in script logic or business rules or some other stuff in the BPC standard IFRS Starter kit. Now, there is another important property which is financial statement selection. All business rules are based on this particular financial statement selection, based on this property value. For example, FS-PPE-A1. This is one property. Under this property, there are some accounts mapped. F-PPE-A1. FS. Yeah. FS-PPE-A1. Under this property value, I have land and buildings, furniture, fixtures and fittings, vehicles, machinery, and other property, plant and equipment. PPE means plant, property, and equipment. All relevant accounts are added under this property. This property is used in the business rules. All accounts are grouped based on this particular property. In the business rules, I am not using any account. Sometimes I might use the business rules, IFRS Starter kit business rules might use some retained earnings account or non-controlling interest account. Those you can change manually. You can identify those things and you can change it manually. Not at all an issue. For other business rules, whatever intercompany eliminations or consolidation of investments or balance carry forward or account reclassification, mainly account reclassification, they have used this financial statement selection, this property. Then next, this property is very important. All the business rules are using this property. The next one, flows authorized. Flows authorized. So we have one flow dimension. Flow is basically opening balance plus your movements equal to closing balance. Your closing balance always equivalent to your opening balance plus movements. So the movements, they have some naming convention. F20 is basically increase, F30 let's say decrease, F55 some other naming, some other description is there. So when I say land and buildings, the flows relevant for land and buildings are these. So for example, when I take one P&L account, for P&L account, flows are not relevant basically. So what they do, P&L account, let's go to P110. The relevant flow is F10. F10 is basically net income. So all the P&L accounts balances, the balance values are posted against F10. That's why they have given F10. If you take one retained earnings, so retained earnings starts with it's a liability, I think L1 star. Let's try like this. Yeah. So if you take this liability accounts, F25, F35, F55. So liabilities increase, decrease starts with F25, F35. See, L means liability, provisions. So as I said earlier, A star, if one account is starting with A, that is an asset account. If one account is starting with L star, L, that is liability account. If one account is starting with P star, that is profit and loss. If one account is starting with E star, that is equity account. That's the naming convention they followed. And also you can see the offset accounts also. All liability accounts starts with L. All asset accounts, clearing accounts starts with offset accounts starts with A star. So based on the account, that flows are defined. Flows are defined. These are the important, and also some basic, some important properties here. Type elim. So this is the property I'm talking about. I just want to make it. So elimination code. This elimination code is basically used in the business rules. You can set your intercompany transactions relevant AR related, account receivable related, APR related, all accounts. You can put it under one elimination code, and you can use this particular code in business rules. Some codes are there. I just give IC. Might be there. IC star IC star. Yeah, see this A1610, A1620 comes under intercompany balance sheet eliminations. There might be some eliminations which are relevant for income statement. The elimination code basically sets relevant for your intercompany accounts, which should be eliminated as part of balance sheet elimination or income statement elimination. This is the first dimension you have to understand when you are delivering flow. When you are talking with IFRS Starter Kit. Now, other important dimensions. Let's go to dimensions here. Flow dimension. Oh, okay. I just want to show the hierarchy here in the dimensions. The account dimension hierarchy. I just want to show here now. The account dimension hierarchy. Let's go here. Go to hierarchy. Yep. One second. You can answer. So you can this way you can ask your questions. Not an issue. Not an issue. If you want to ask your question, yeah, if that is a relevant question, you can unmute yourself. You can ask the question. Not at all an issue. Right. So you have total balance sheet, total assets, and total equity and liabilities. Total assets, you have non-current assets, current assets. Under non-current assets, you have all what do you say, fixed assets, relevant one, non-current receivables, long-term notes, and all those things. Yeah, go ahead. So,
Kiran, I have some relevant question here. Sorry for the interruption. So basically, like, while we maintain this account dimension for consolidation purposes, and then like when we go and validate this with the corresponding ECC chart of accounts or any source chart of accounts, we don't necessarily need to find all the properties what we are seeing here in this account dimension here. There, all you might find is a base account ID is what you might find in source ID. Okay.
Correct.
So all these properties, whatever you are maintaining here, like specific to IC elimination or flow dimensions,
Correct.
Flow values you are maintaining, and some currency related and input ready or not, whatever it is. So it's basically we are maintaining some additional properties on this particular account dimension. So is that whenever actually clients use us some chart of accounts, or if they ask us to go derive them from source ECC account, sorry, source system.
Yeah.
So is that mapping or like, so that and all we do? Is there any automation? For a lot of times if we say that, hey, you have to go and manually maintain every account, you need to go manually maintain these things, clients feel so frustrating. Like, that's something what I faced personally. Like,
sure.
Yeah, so they expect some kind of an automation process or maintenance standpoint. They feel like, oh, is it something we have to go and manually go maintain this every now and then? So is there any way that we can address that?
Yeah. Now, once we discuss this session, I just go through the overview. Then we are going to discuss how to adapt the account dimension. Let's say your customer can have operational chart of accounts, many operational chart of accounts, even one operational chart of account. Based on your operational chart of account, how can you define group accounts as per IFRS GL accounts?
Not just the group accounts, but properties, like particularly, say for instance, here you are saying maintaining against one account.
Correct. So when I'm talking about account, GL account, group account, so I'm talking about flows. I'm talking about the flows property. I'm talking about the selection input and report property. I'm talking about the property values which are used in business rules, right?
Which are not there in ECC, but they are maintained in BPC.
They are maintained in BPC, correct. So how to do that? How to adapt? How to adapt? Because if you change the account property values, your business rules will not work.
Kiran, am I correct in assuming that you will be covering this while we go along in the course?
Correct.
I'm sure you will.
Tomorrow, next session, I'm going to cover how to adapt this account dimension.
Yeah, and that is precisely what I say, that if we park our question till you finish your presentation, that will be very helpful, because I know that most of these things you will be covering by the end of this.
Yep. So let's go to next thing, total equity and liabilities. If you go through this total equity and liability, you have some equity relevant accounts which are relevant for our GL accounts, and non-controlling interest, some equity accounts are there. Total liabilities, long-term liabilities, current liabilities, those are there. Now, there are some accounts. Statement of changes in equity, statement of cash flow, statement of comprehensive income. If you see here, statement of cash flow, whatever cash flow items we proposed, IFRS Starter Kit proposes these cash flow items. If you want to go with this, you can go, or you can add or remove. Both are possible. We will discuss how to add or remove these particular cash flow items and how the cash flow is derived. That also we are going to discuss. Now you can see this cash flow hierarchy. Working capital, inventories. So working capital is having working capital, one cash flow item. Inventories relevant, one cash flow item. Trade receivables relevant, one cash flow item. So the account dimension in IFRS Starter Kit is very important. We have to give a solution so that ECC, you will have so many, let's say operational chart of accounts. You might not have group chart of accounts. So how to adapt that ECC chart of accounts, or how to adapt this IFRS Starter Kit account dimension as per your ECC GL accounts. So we are not going to use operational chart of accounts. IFRS Starter Kit definitely need one group chart of accounts. If your ECC system is not having the group chart of accounts, so how to map your operational chart of accounts to group chart of accounts, how to define your group chart of accounts, how to enable the property values, that we will discuss in our next session. Now, entity dimension. Not entity dimension, the other important dimension I feel flow. Flow is the important dimension in the account, in the IFRS Starter Kit. The flow dimension basically shows, yeah, go ahead.
Have we finished account dimension? Properties? I have one question.
Yeah, go ahead.
Kiran, which property will use for that profit posting for a month? Net profit posting to accumulated income, reserves account. Is it based on some property, or
whatever retained earnings, whatever net income, if you want to transfer to any GL account, balance sheet account, or what is the profit posting?
So our
net income calculation or
net profit calculated and it is transferred to the reserve.
okay, there is a business rule. It automatically, so net income as a, I will take this hierarchy here. If you see, there is no separate account to store the net income. I will go here. I will take the balance at this level, net income attributable to parent, and this one I will transfer to retained earnings account.
Okay, so this is a P&L account.
Yeah,
Okay.
it's total P&L balance I am going to take. So anyway, I'm going to show that one. Anyways, one minute. Business rules. Go
no
to
problem,
business
sir.
rules.
You can.
Yeah.
I can park this question.
Yeah. Account based calculation. Here, net income calculation. What they did, they have taken net income at group level, the TP 000, which is my all P&L accounts, and they moved to E1610. E means equity account, retained earnings account.
Okay. Thank you, sir.
Yeah, with separate flow. F10. Right. Now let's go to flow dimension. Flow dimension designed such a way. First, you understand the hierarchy. Your closing balance, this total equity, these are defined for changes in equity. These flows we'll discuss later. How you can use these flows for embedded consolidation. So how can you adopt this equity relevant flows, and how can you make this IFRS Starter in embedded consolidation or real time consolidation? In the next sessions we'll discuss. Now here you see F99 closing, and you have end movements, period and closing. So opening plus other movements are here. See, F20 is increase purchase, F25 is increase in depreciation, F35 is decrease in depreciation, whatever. So you have incoming units, you have outgoing units, and you have currency reserve translation relevant flows. Opening plus all other movements is part of your end hierarchy, period and closing. Always this end at end level, whatever amount is there, that is equivalent to your closing balance. We have to show closing balance, opening plus movements separately. Always closing balance equal to opening plus movements. That's how the flow dimension is configured. Then,
Kiran,
yeah.
Sorry. So why the T999 is there? Another
changes in equity, they are configured. The movements, whatever source movements they have taken, they put it under this T99 movements.
So
this is for changes in equity.
So is it a duplication? It includes an end also.
So basically, I have to show in the equity statement. I'm showing what is the issued capital, what is share premium, what is treasury shares. As a workaround, they have taken. So let's say issued capital, I have account, but in the columns I want to show issued capital how much, share premium how much. So the columns I'm using flows, and rows I'm using account.
Okay.
Yeah. So now when I go there, equity, we will discuss, detailed discussion will be there in the next session. Then I will explain why these T199, 299, these flows are there. This is for purely reporting purpose. Yeah.
And Kiran, one more question, sorry. In account dimension, we define the property where we mention that what are the relevant flows. Is there any relationship between flow and this dimension?
Yes. When the adjustments are happening, let's say when I want to adjust this land and buildings, then system is in that particular input template. System is going to show these flows.
Okay.
So system allows basically it will show all the flows for this particular account. System allows the user to change only these flows, not the other flows which are not mentioned here. So there is some conditional formatting. There is some conditional formatting in EPM add in Excel they are using. Okay. Based on that, they are restricting.
Sir. Thank you, sir.
Now, Flow dimension we discussed. What else? Audit trail dimension. It's important, but yeah, it's important. Let's say. So A type audit trails, M type audit trails, I type audit trails. We know what is the use of this normal BPC standard functionality, and they define the hierarchy also here. All consolidation relevant hierarchies are there. So what audit hierarchy we are going to use in the business rules, we can check what are the automatic audit hierarchies we are going to use, and also we can see what are the audit trails included in the consolidation, what are the audit trails included in the currency translation. You can see in these two properties. Now, models. As I said, one model is for budget consolidation. I'm not discussing anything about budget consolidation. We are concentrating only on legal consolidation. Consolidation model, intercompany matching model, ownership model, exchange rates model. All the intercompany relevant, if you see IC matching, this particular model, you have IC account, IC audit ID. Right? Like debit 1, credit 1, debit 2, credit 2. So this particular model, we will load all intercompany relevant transactions to this particular model, and we will match whether those intercompany transactions are matching or not. If not matching, for that there is a solution. Now let's go to consolidation model. This is my consolidation model. Consolidation model is at company code level. If you see, there are no other like segment, profit center. Those are not there. If you want to include those one, you have to copy this. You have to add those dimensions in your environment, and you have to create some. I suggest you create some other model, copying this model. That is the best option. Now, account, audit trail, currency, entity, flow, intercompany, scope, time, version. These are the common dimensions. All the dimension types are required for this particular consolidation model, which is part of IFRS Starter Kit. Now, the other important thing we have to understand, business rules. Let's come here, business rules. Remember, each and every business rule we are going to discuss detailedly in our other sessions, and also we are going to discuss how to adapt those business rules. Now, account-based calculations. The first business rule they have developed, account-based calculations. In the using account-based calculations, they are calculating the cash flow. Whatever cash flow based on SCF account reclassification business rule or account-based calculation. Statement of cash flow, you have business rules. In these business rules, based on your movements, they are going to derive your cash flow. So, cash flow in IFRS Starter Kit is derived based on the movements. Most of the consultants might think based on the hierarchy it is derived. No, that is wrong. Based on the movements, based on the account property value. See here, I am not using, the IFRS Starter Kit is not using any GL account. IFRS Starter Kit is using only property value. Remember this for account reclassification. So, based on the movements and account property value, it is deriving the cash flow. We are going to have a detailed discussion on this. Then same thing for statement of other comprehensive income, statement of changes in equity. If you see statement of changes in equity, whatever movements from the GL accounts they have taken, they are putting against T flows. See T110, T120. They have separately created one flow hierarchy for changes in equity. Whatever movements are coming from your accounts, those are transferred to this T110, T120, T130. So when we see the report, I'm going to show you changes in equity report, then you will understand why they are putting against this particular flow. Now, another business rule, For net income calculation, you have one business rule, and also flow calculation. So opening balance minus closing balance, the variance calculation, there is a flow. There is a calculation here. So flow calculation basically, so all your movements, all your balance. So BAL means it is I think closing balance. All these movements are under this, opening plus movements are there under this. So this difference basically makes, see, one is positive, one is as it is sign, another one is reverse sign. So the difference gives you the variance F15. Now next, some other business rules. Carry forward business rule. One business rule is there. In this carry forward business rule, it will take all your balance sheet accounts, and it will carry forward to the next whatever consolidation period as opening balance. So it is taking all TBS. TBS means total balance sheet. Don't think about the TB. Yeah, TBS means total balance sheet. So here flow is N flow, all the movements it is taking, opening plus movements, and it is transferring as opening balance for the period where you are consolidating. The next business rule is eliminations and adjustments. Right, we have to discuss these methods and method-based multipliers when we are talking about eliminations and adjustments. They have different methods. So they define method for equity, they define method for full consolidation or global consolidation, they define method for holding. So they define total 7 methods. And you see here equity in this IFRS Starter kit, how to handle this equity. Equity we are going to handle, we are not going to use equity type in the business rules. What I am trying to say, if you go here, method-based multipliers, we have method-based multiplier. If you see this equity, right, even though it is equity relevant method-based multiplier, we are not going to use the type of equity. If you see the course content of the certification material or BPC 440, we say, right, there equity business rule, it's configured based on equity type. So the method-based multipliers, you have to select the equity type. But IFRS not going with that functionality, because here in the IFRS Starter kit, I'm going to use integration business rule. When BPC 440 decided, at that time they have not used integration business rule. What happens? All the equity relevant accounts are moved to the group, and at the group level, that equity subject at that equity company code accounts are reversed. Actually, whatever not relevant, those are reversed. Now, what happened? We will use the method is based on global only. We are going to use integration business rule. The integration business rule will copy, will post subsidiary relevant, full consolidation relevant account values to the group. It will not take equity relevant account values. So we will detailedly discuss what that integration business rule does. This IFRS Starter kit is developed based on the integration business rule. So we have methods, method-based multipliers, which are already defined. There are method-based multipliers defined for budget consolidation. There are method-based multipliers defined for
could you, when actually, when actually you're explaining about the equity consolidation, full consolidation, and also global consolidation, like when you're actually doing that, like, can you actually throw some functional insight of it, like, functional aspect of it, as to how to address client needs when they've been
So this yesterday I sent you some standard consolidation my recordings. In that,
Okay.
I explained what is the difference between full consolidation. What is full consolidation? What is equity consolidation?
From the functional standpoint.
Kiran, I have not received any.
No, that is my previous session, BPC standard consolidation recordings. You just send an Aman,
Okay.
you just send an, yeah.
Okay, thank you.
Yeah, that's not an issue.
Sure.
Now, these business rules are defined. These business rules are defined. That methods are defined for both legal and management consolidation. That budget consolidation. Now, eliminations and adjustments. If you go here, I said integration business rule. We have to understand this integration business rule. So, integration business rule is here. This is adjustment type I. Now, there are some eliminations and adjustment business rules for dividends. There are some business rules for goodwill. There are some business rules for IC eliminations. There are some business rules for equity. You can see all those here. So, if you go to integration business rule, it says there is an adjustment type I, and they have it is considering only the methods relevant for holding and full consolidation. Give me 1 minute. Yep. There is. Yeah, I'm muting you all. So there is a question from the participant that can you later show how to integrate the dimension and its properties and in an input form, especially audit trail and scope plans? Yeah, sure, Evan, I will do that. Now, here you see the trial balance and profit and loss statement. I'm taking only for full consolidation relevant entities plus holding companies. Yeah, I'm not considering. See, how can I say I am considering only those two? Because I000, this particular method-based multiplier, defined only for 10 and 20. 10 and 20. When I say those are not equity relevant. See, methods. Remember, 10 is holding, 20 is full. Yeah, 30 is equity. Correct. So whatever is 28, 29, those are all full consolidations. So let's come here. I000 method based multiplier I showed you now. So I000 is here. This is I000. If you see here, I'm using only 10, 20, 28. 28 is basically divested. I'm not considering any what do you say, TB or whatever you say for the equity at this integration business rule. Now currency translation, they have defined very good. I mean, for all the problems we have solution here. Currency translation for historical, how to calculate. See here, historical investment equity accounts, how the currency translation should be done. So if you see, let's see historical. Let's go here. Historical currency translation business rule based on the movements. So the movements are, if you see source flow, the movements are based on a property value they are configuring. There is a property they create. So IFRS Starter, it defined a property in the flow dimension for currency translation. If the flows, some flows belongs to AVG, then we will use AVG, average rate, for the calculation. If the flows belongs to INC property value, then I will use INC relevant formulas, right? So now other business rules, intercompany bookings. So there are not intercompany bookings. We have some other what do you say, other model. That's why they have not defined anything here. So from there we can take it. Intercompany matching, only currency translation is there. So business rules are defined. Also some script logics are there. Script logics basically to execute these particular business rules. They have defined some script logics in the consolidation. They defined some business rules. So some are some budget relevant, some are consolidation relevant to execute this particular business rule. Then let's go to the report side. What are the reports input templates delivered? What IFRS Starter Kit did, SAP knows what are the issues the consultant is going to face or the customer is going to face. The issues we are going to face relevant to trading partner, the issues we are going to face relevant to transaction type, the issues, transaction type is basically flow I am talking about. The issues we are going to face relevant to GL account. What type of issues we are going to we are going to face? Okay, flow is not tracked in the ECC system. Transaction type is not tagged to a posting in the ECC system. Trading partner is not tagged to a intercompany transaction posting in ECC system. Right. So these type of issues common in the ECC system if the ECC is not properly configured. So IFRS considering these issues, and they have given solution for this in the IFRS Starter Kit. What they did, they have given some input templates. Using those input templates, they have given separate audit trail for adjustments. In that input templates, they can adjust the particular I mean wherever the postings are having problem, those postings they can adjust. I will show you those reports and input templates connecting to Excel. I'm connecting to the Excel. Yeah, it opens. Give me 2 seconds. Processing. Now go to EPM. Log on. I have created the connection or not even. Right. So go to the folder, open server root folder. Understand this one. Here you have input schedules. There are some input schedules relevant for actual. You can see input forms. These are the 4 important forms: 10, 20, 30, 40. These are the input templates defined for your adjustments. See, balance sheet can be adjusted based on your opening balance and closing balance. Directly you can adjust your opening, I mean those balances, whatever balance you have, or you can adjust your balance sheet by flow, because if you want to derive your cash flow, you need flow. So that can be done using this particular input template. There are some local reports developed. See, statement of financial position, income statement, which is balance sheet, income statement, intercompany, and statement of cash flows also there. And you can see the consistency. There are some consistency report. Your opening balances are matching, your closing balances are not. Those reports are developed. When you go to reports folder here, yeah.
Those input template, that means on those input templates, will users supposed to make changes directly?
Yes, those are tracked with separate audit trail. See, whatever you are taking data from source, that is against input, let's say. Audit trail is input. Whatever they are adjusting, that will be part of adjustment audit trail. So at any time you can easily know what is changed in BPC.
Will that be allowed? Okay, I thought like it can be done only through journal postings.
No. That is one way, and that is also possible. I mean, you are right. Journals, if I want to track the changes, if I want to have document number and all these things, common adjustments, you can do it here, not an issue. Yeah. Now, local reports, actuals, financial statements. See, These are the financial statements. So all the reports are already developed. You just need to handle your account dimension. Most of the consultants, what they do, because they did not understand IFRS Starter Kit, what is there inside, they don't know how to adopt this IFRS Starter Kit for their requirement. They start creating consolidation requirement. They start developing this consolidation requirements in separate environment. They will not adopt this IFRS. Then to develop all these reports, to develop the business rules, the logics, all these things takes a lot of time. Even then it might not work. So always better to adopt this IFRS Starter Kit. So now statement of profit and loss, other comprehensive income, financial position, cash flow, changes in equity, all these templates are already delivered. There are some analysis reports, there are some dashboards delivered. You can see your balances by audit ID, by entity ID, by flow ID, all those things. There are some control reports, whether your assets, liabilities are matching, your balance sheet, income statement is matching. There are some, see, all this dashboard is there, whether all this, your balance sheet, income statement, you can see in one report, and opening balance in integrity. Business rule, based on business rule. So, some reports, analysis reports you can use, control reports you can use, financial statements you can see, some budget relevant reports also there. See, these reports I'm not going to show you. I mean, it is not relevant for our topic. Now, let's say I will show you one input template, which is this one. Let's say balance sheet. Yeah, just click on balance sheet. Click on open. So, land and buildings, all base level. So, this is happening based on the selection. If you go here, EPM, edit report. If you go to account dimension, see, I was talking about selection in input and report, one property value. See, they used in the report. Understanding this report is very important. Yeah, that's easy to understand this report. Now, you see, this is account dimension. All my data, whatever is coming. So let's say time I am selecting 2019. Yeah, refresh. So it is for one entity E0. So I have all my data against input. Whatever adjustments I want to do on top of this, I can do it here, local adjustments. There is a question, one second. Right. Yeah, when you were asking about context of BPC standard filtering this thing. See, these all I cover in BPC standard consolidation training. Anyways, because this I'm just showing here now to adopt this one as to your real-time consolidation, BPC real-time consolidation or BPC embedded consolidation. There is no EPM add in itself. I will cover how to do this one using BEX queries. Now, local adjustments, you can do it here. All the local adjustments, you can do it here. Now, you can see they have given one link here. Yeah. Sometimes what happens, this link will not work. I used to change that link. Let's try. It throws an error sometimes. See, it is going to open balance sheet by flow. I said, right, A110, some flows are applicable. See, for land and buildings, F06, dividends flow is not applicable. So, it's grayed out, see. So, for this, system automatically shows your balances, opening and closing. This is okay. So, Audit Trail is local adjustments, right? local adjustments, there are no amount posted, that's why it's blank. Yeah. If you want to see, let's say, if you want to do based on input, if you click here, then it will show values. Because the audit trail is input. See, so the variance in this particular land and buildings, this is the amount increase, this is the amount decrease. So this minus this is the value. Now you can also see the closing balances. So you want to have any adjustment for whatever data is coming from the ECC system. If you want to adjust the flow values, you can adjust here. This is the template. Also, they have given one good input template. If you don't have flow, you want to adjust directly, you can adjust here. Also, intercompany relevant, they have given some. See, some things are relevant for intercompany. So I can click here. So it is going to open intercompany relevant accounts and one report to adjust that intercompany transactions. So I will detailedly explain how this intercompany report works. Always IFRS Starter Kit is coming with the logic that your intercompany transactions, that means wherever the trading partner is tagged, that value should equivalent to your non-intercompany transaction. So if you see I_non value 47,000, once I adjust against this intercompanies, still this 47,000 is matching with my I_none. What is this logic? How this control should be 0 always. How this is used, I will explain in the later sessions. So intercompany adjustments, you can take I_none transactions and you can adjust to the trading partners using this particular intercompany input template.
Kiran, the intercompany differences will be posted in a separate LM entities, or it's going to be in a separate audit trail account? Audit trail.
You can move it to separate audit trail. I see here IFRS Starter Kit is using IC intercompany.
Okay, that's a different audit trail they are posting the.
Exactly, yeah.
Okay.
So same way you have some cash flow relevant reports. If you go to input templates, not input templates, local reports, let's go here. Statement of cash flow. Entity level cash flow, group level cash flow, you can see using in this particular cash flow statement. Now you can see here all the cash flow relevant items, input, which is directly coming based on the ECC data, whatever is coming, based on the local adjustments you will see here, and total. So the cash flow is at this level, all local input. So instead of, let's say, I will select corporate here. CS. Okay, this is entity level, consolidation entity. So at this level, it will show you data is not there. Okay. So now entity level cash flow we saw. The other stuff, what else is there? I can show you in this. Yeah. So let's go to reports. Changes in equity we'll see. You can see all the reports here: cash flows, financial position, other comprehensive income, profit and loss. Open. So what I'm trying to say here, you see issue of shares. Yeah. There is an account. This is SCE 2000 is one account. And dividends paid, it's an account. Account in the sense, how cash flow items are created. Same way I created some accounts to show my changes in equity. Yeah. So this issue of shares SCE 2000, in this, what is the issued capital? Is there any way I will show values here? Let's check any values it is showing on it. I have to execute. Here it is there. So all are there in the other movements. So this is my flow T110, T120. These are my flows. So it is taking values from the GL accounts, normal our GL accounts, equity accounts, and it is moving to SCE accounts. Also, it is tracking the separate flows. For their purpose they have created. So because here there is no opening, closing and all these things, they need only issued capital, share premium, treasury shares, which are not part of our actual flow dimension. That's why we created separate hierarchy. IFRS Starter Kit created separate hierarchy. Here you are going to show non-controlling interest also. To enable this report, that separate flow hierarchy is there. What else? Yeah. So let's talk about your questions. You can ask questions now if you have any questions. So one thing, keep it in your mind, like we are going to discuss each and every point, whatever we discuss in the IFRS, because we have to adopt this one. We have to implement our BPC embedded consolidation or real-time consolidation. It will take some hours, so we are going to have these sessions next week. Yeah.
Kiran, are you going to cover how these reports or input form configured from backend?
See, I'm not going to create all the reports, input templates.
Yeah,
which
but
are
one of the reports, any one of the reports.
Yes, I will do that.
Okay, and one more thing. In BPC embedded, we don't have EPM, I guess. I guess we have analysis for office, but here we are using EPM adding, so I got confused here.
Come again, sorry.
BPC embedded, we do have analysis for office, but here you are using EPM adding.
This is BPC standard. I'm just going to adapt.
Okay.
I'm going to use analysis for office and DAX queries only.
Okay.
Kiran,
Yeah.
Kiran, you mentioned a document to install the IFRS. So, can you please send us that document?
Sure. I'll share that document. How to install IFRS Starter. Yeah. Any other question? Yeah.
Yes, Kiran. Are you going to cover the intercompany elimination for means all the scenarios?
You are breaking. We can't understand your question.
Your voice is breaking. Yeah. Now it's
okay. Hello, Kiran, will you cover that intercompany eliminations like scenarios like intercompany goods sale and some kind of scenarios where goods sold and partially then inventory profit elimination from the inventory? Are you going to cover those scenarios?
so. If you see in this, they have intercompany bookings model where they are going to handle all intercompany relevant transactions. So some scenarios you said the goods or whatever. So those are once the accounts are posted, everything adjustments are happening. After that, we are going to use intercompany bookings. Only we are taking the balances. Based on the balances, we are going to do that. I'm going to whatever is there in the IFRS Starter Kit intercompany bookings, how to match, how to transfer data from consolidation model to intercompany booking model. That I'm going to cover.
No, I'm talking about eliminations of sales and purchases, elimination of dividends and elimination of unrealized profit from inventory.
Yeah. That is part of IFRS. It's configured. Yeah, we can go through that.
Just want to check if are you going to cover that or not. So,
yeah.
That's fine. And I have one question regarding, you said via business rules we are moving.
This way your voice is not at all clear.
Okay, just a minute.
It's big.
Really, we cannot understand what the question you are asking.
Is it okay now? Or do you still have a...
Still
same problem.
On chat box.
Yeah. Write your question in the chat box because if same thing is happening.
No problem. I think I need to restart my model. I will personally, I'll ask the next session. That's okay.
Yeah.
Okay. Kiran, just a quick question, Kiran.
Yeah.
Kiran, like once we implement this IFRS standard kit, okay, whatever is available in the models, okay, how can we map those or like real-time requirements, okay? These are like inbuilt models, okay. So how can we like let's say the company codes are different for the any organization, okay, not like same as the standard one, okay. Those like we need to change in the dimensions on the corresponding properties, or like where exactly how can we how can we implement once we install this standard kit? How can we ensure that like it is going to fit for our requirement?
That's where I started this one, right? How to enable BPC standard IFRS starter kit for BPC embedded model. So when we are talking about this, right? The same, if you are installing IFRS starter kit for your customer, how to adapt that one as per customer requirement. So the main objective of this course is that, plus BPC embedded consolidation and real-time consolidation.
So we'll walk through in the system itself, like not only like this is the solution walkthrough, but can we do that in the system as well as example when we take one example?
Sure.
Okay. Yeah, thank you.
Any other questions? Yeah. So in the next session, so this one. Sorry.
Are you going to send us this recording?
Yeah, I'll share this.
Thanks.
Sorry. Yeah. So in the next session, so day 5th session. From next week onwards, I'll take more hours. I will plan 3 days: Saturday, Sunday, and Monday. India Saturday and Sunday and Monday. Yeah. So the next session will be on India 21st April. Yeah. USA 20th April.
Kiran.
Yeah.
If you're planning for the 3 days, then probably I won't be able to join the third session.
Okay, then 2 days only. I'll increase that. Yeah, 2 days only, Saturday and Sunday. Yeah.
Thanks, Kiran.
Yeah. Any other questions? Yeah. I'm stopping the recording. Yeah.
Thank you.
Yeah.